Welcome, this is HR That Works President Don Phin. In less than 5 minutes, I'm going to give you some valuable insight on risk management conversations that work. The most important thing in this entire area is to make sure you ask the right questions. Traditionally, we've looked at risks, costs, variances from a manufacturing standpoint. We've had total quality management in this country for 60 years. If you're not a TQM manufacturer today, you are not in business, and that's not just true in the United States, that's true worldwide. And Dr. Deming taught us about variance control charts, okay? So you see within these red lines what you would call a general variance, and that's where you want to spend your risk management time reducing the general variances, that 20% of activity that generates 80% of the risk, if you will. Outside the red lines are what you would call special variances, and you don't want to spend a lot of an organization's time managing special variances because they're so one-off, if you will. That's in large part what you have insurance for. So whether it's employment practices liability, E&O insurance, work comp insurance, all those types of things are really designed to deal with special variances. The cost calculator that I've created that's on the hrthatworks.com page does an excellent job of defining the risk associated with the HR function. I encourage you to watch the video on that page and to do the calculations yourself. In this example, I go to a company with $1 million in payroll and 25 employees, and at the end of the day, you see that their variance is as much as $140,000 or 14% of payroll, which doesn't surprise me. Most companies we've done this with for real have at least a 10% of payroll variance. And arguably, the people are there to add value. You don't spend $1 million on payroll to get $1 million back. You spend $1 million on payroll to get a percentage greater than that back. So the impact is actually a little higher than this 10% figure you see right here. But, I can outline these figures, but what I've come to learn with people is you've got to make things concrete. So in this awesome book, Made to Stick, they talk about that. A number is an abstract. What it buys you is concrete. So I'll then ask this executive, if I gave you $140,000, what would you do with it at home? It is your bank account, after all. If I gave you $140,000, what would you do at work? And I have them thinking about that sports car they always wanted, the European vacation, the kids in a private school, not having to fire or hire a new employee. So we take this out of the abstract and we make it concrete. But then what I've come to realize about so many of these executives is they are driven. To them, the greatest risk is not growing their business. It's not getting sued. So I want to talk about the revenue side. That's what they focus on, which grows their business. So I asked them, how many more clients will you have to get in to replace this $50,000 variance or this $100,000 variance? So for example, if it's an insurance agency and the average case size is $50,000, when you do the math, they'll need 40 new clients to replace a $50,000 poor hire. If you're an automobile dealership, you're looking at approximately 40 car sales to put $50,000 in your pocket. If you're a physician, you're looking at close to 1,000 patients. If you're a private physician, because they get about $50 per patient to put that money in their pocket. So when we start talking about revenue equivalencies, people really wake up to the scope of that risk, if you will. And lastly, we have to get the nonsense out of the way. There's a line I use in all my workshops. It doesn't make sense. Don't try to make sense out of it. And from that standpoint, you have to know what people's objections are and be able to have the right response for it. So, of course, for the folks that are HR That Works members, we've got that all laid out for them because we've been doing it for quite some time and working with our more than 70 partners in this program. So I'd encourage you to get prepared for any nonsense that may get in the way so you can object to it. As one of my mentors, Alan Weiss, says, time and money are not objections, they're just allocations of resource, and this will teach you how to deal with stuff like that. So lastly, if you've got any questions about it, you'd like to know a little bit more about HR That Works and how it can help your agency, your consulting practice, or your business in general, please call or email me today, 800-234-3304, or don@hrthatworks.com. And thank you very much.